Hey guys, welcome to another episode of The Aspiring Entrepreneur. In this video, I'd like to talk to you about shorting stocks. I get asked all the time, what is shorting? It sounds like a very fancy term. And I also get questions and comments on how people can short. And so in this video, I'd like to talk to you about what exactly shorting is and how we can use it as part of our arsenal for trading, and give some examples of where it essentially works and where maybe it probably doesn't work and where it's a good idea to get involved. If you do enjoy that video, please hit that like and subscribe button. I appreciate anyone's support. We are a 100% free content channel, and we do not sell you any chat rooms or any programs. Okay, so with that said, guys, let's get started. All right, guys, so let's dive into it here. So the first question really everyone should be asking themselves is, so what is shorting? So the name itself is really confusing because it's like the word short, does that mean I'm holding onto this thing for a few seconds, a few minutes, a few hours, a few days? What exactly and why exactly is it called shorting? And so the term itself throws a lot of people off, and maybe it even sounds fancy for certain people. So just think of shorting in essence as the exact opposite of going for a long, okay? So if I were to sort of draw out an example of going for a long, right, is you essentially buy a stock here and you expect it to uptrend higher, okay? So it may do something like this and it may go up, may consolidate, whatever the case is. But the idea is you buy something here low and you sell it maybe up here at somewhere higher, right? So we're expecting what we call an uptrend. Well, think of shorting as the exact opposite, okay? So we're actually hoping the stock value goes down, and as it goes down, we actually make money, okay? So for example, let's say the stock decides to tank, or some news came out and it decides to just sort of dive down, okay? And so what we do is we actually, and I'll use a green arrow to illustrate this, is we actually make money as this thing goes down. So what we do is we buy it, let's just say up here, okay? And then what we do is, or essentially we don't buy it, but in shorting, we refer to it as selling, and I'll explain that in a second. And then we essentially cover our position, or, buy it back right down here, okay? So this would be our exit point. So our entry is actually, believe it or not, at the top, or where we think the top is, and then our exit point is going to be at the bottom, okay? So when we say shorting, someone's going to say, well, I don't understand. How do I make money if I buy something up here and I sell down here? It sounds like I'm taking a loss. Yes, that is true if you have a long position. When you take a short position, you're not actually buying the stock up here, you're actually hitting the sell button, okay? So the stock you're trading, instead of buying up here, whether it's 5 shares, 100 shares, 1,000 shares, you're actually hitting the sell button up here. So then you may ask, well, how is that possible? How can I sell something I don't own? And that's where it gets a little more complicated, okay? So your broker, whether it's TD Ameritrade, E-Trade, Lightspeed, they have shares that either people who are in their platform that own, or they have themselves as an institution shares that they can lend you. So for example, Apple, Tesla, there's thousands of stocks out there, right, where the users of that platform have and own, and they actually can make money off basically lending those shares to the broker, or in the case, the broker may just have those shares around. And so what the broker does is, you as a user, they essentially give you those shares, they lend you those shares, so you don't own it, they lend you those shares so that you can sell them ahead of time to buy them back later, okay? Now, not all shares are available, okay? And depending on your broker, you may see things like on, for example, TD Ameritrade, you may see some like, words like HTB, which is hard to borrow or cannot borrow. On Lightspeed, there's different ways that brokers communicate, which means that there may not be shares to lend you for you to short. So when you're up here and you're selling a position, your lender is giving you shares to go ahead and short. And then what you're doing is you're basically down here when you want to exit your short position, or you want to close your short position, you're essentially hitting the buy button, okay? So for example, if you sold them up here at, let's just say $100, and let's say you bought them back here at, let's say $50, well, 100 minus 50 is essentially your profit. So you've profited $50. Now, let's talk about some of why not everybody shorts, okay? For example, one of the things that you may find is that there may be fees that are required for you to short. So your broker may say, look, we can't find this, we don't have these shares. However, we have this service that allows you to pay fees for you to essentially borrow the stock. And some of those fees, again, go to the people who actually own the stock. And that's a way that, interactive brokers and a lot of these guys let you make money if you're with them as a user. So locate fees are one of the things that you need to calculate if you're going to get into this sort of short game. Is if it's not necessarily like a Tesla or an Apple, or what we call a ETB, and easy to borrow, which is it's readily available, it may be something that you might have to actually pay a locate fee for your broker to at least allow you to lend those shares to buy them back. So that could be part of your, essentially taken away from your profit. And then another thing is, more importantly, is looking at ways that when shorting a stock, what's your risk, right? So when we talk about going for a long, let's say I buy X, Y, and Z stock for $5, right? And it goes down to 0. Well, I know my risk. But let's just say I decide to short a stock at $5. What's my risk? My risk is essentially almost, if you call it, it's really infinity, right? That stock could go to 5, 10, 15, 20, 100, $200, and there's nothing I can do about it. And so there's a lot of examples that we see on the market where you can tell that there are what we refer to as a short squeeze, and essentially where people are getting stuck, shorts are getting locked up in the stock, and they're trying to essentially cover their positions, which is basically buy it back, right? So we mentioned that they're trying to buy it back down here, but for example, the stock might be going up and up and up. And so part of the short strategy is to know where exactly to short. And if it doesn't go your way, for example, let's just assume that the stock started here and continued to go right up. Where exactly is your stop? How much are you willing to sort of go before you decide that, I've had enough, right? So if a stock goes up and up and up and up and up, and you're shorting down here, where exactly is your stop loss? So always make sure you have a risk management plan. And that kind of makes it a little difficult to do these videos, right? Because the audience is wide. There's going to be beginning traders. There's going to be traders who have significant experience, maybe never shorted. So you have to obey a risk management plan. So for example, most traders at worst will obviously do a 1-to-1 ratio. For example, if I was shorting down here and I was expecting, let's say, $1 retracement right down here, and I was going to buy it once it hit, let's just say $1, they do a 1-for-1. Well, I would do the same thing for a stop. So for example, if this thing kept going up and up and up, I would stop here at $1 and cover my position for a 1-to-1 loss. Okay, so that's usually generally what most traders do. Again, if you want to do a 1-to-2, a 1-to-3 reward, that's great. But a lot of times that's how shorts get blown up, is they are getting squeezed. There are a lot of buyers out there. There's a lot of demand for a stock, and the people who are selling, all those shares are being absorbed, and the only people selling are shorts. So imagine there's not real sellers, there's just shorts who are lending out shares, and they're selling them, and everyone just keeps buying them, and then there's no actual sellers of the stock. Everybody who wants to go long is going long, and now all of a sudden they're up here and they're blowing up their account, which we don't want to do. Okay, so if you're in this game for the long term and you do not want to blow up your account, you have to have a risk management strategy. I'm very big on not following people, not following other traders. I myself have tried that, years ago, and it wasn't a good idea. I've tried probably a handful of times, and it just doesn't make sense because everybody trades differently. Everybody's account trades differently, and there's only so much heat you can handle when you're trading. So with that said, what I wanted to do was give some examples of actual of sort of what I call a short squeeze. And this past week, and we're recording on January 10th, 2021, we saw that with DDD 3D systems. Okay, so if you want to see what a squeeze looks like, basically look what happened here, which was on Thursday, is we essentially had all these green candles on my 15-minute chart, and you can see that the stock never came back, right? So most people, what they'll do is, if you're a breakout trader, you'll trade the breakout right here on the this is the pre-market here, and they'll trade this as take a long. And what shorts will do is they'll say like, well, on the RSI, we're way overextended. I mean, this thing literally hit almost 100 on the RSI. So they're going to see that this thing's very extended, and then they're going to short. Now, shorts with experience understand that when you're shorting, the first thing you should do is you should look left and understand where did this essentially stock run into issues in the past. So if I scroll back, you can see there was nothing in 2020, but you can see that the first time some of the levels I can draw up were probably here around 16, and the next level would be about 22. And then you can go back further and you can see other levels as well. up here, you know, 60 and so on. So when you're shorting, you're looking at previous sort of resistant levels to understand where do you think the stock is going to go, and also understand the idea of float rotation, which is how many hands has this stock exchange. So for example, the volume is low and it's being pumped up, right? That's different than the volume that it took, for example, to get up in that price in the first time. So for example, if you look here, back in 2019, you see these sort of volume, these bars are represented by volumes, these high volume days. Those are the days that you want to look at to see where did the stock land when it was getting pumped up. Okay, on these high volume days, how far were they able to sort of rotate it? Because those are, again, buyers and sellers coming in, exchanging the stock, rotating it X many times. So you understand, for example, if I have a high volume day, where am I going to potentially run out of resistance? So when you short a stock, what happened here was where people, and I knew so many people that were talking about in different chat rooms, that they were just, their accounts are getting blown out. I mean, they're just waiting, right? So they're shorting here at previous levels. They're shorting, you know, they're basically trying to find, where can I find the top? And so they were shorting and shorting, and they were getting squeezed. And you can see this volume just completely increased. And then we traded sideways, right? So shorts, again, if you're shorting when you're getting sideways action, you'd be shorting here and you'd be looking for a failure. And what happened was shorts were trapped. Now, why do I say they were trapped? Shorts were trapped because you can see that from 20 up to 22 or 21 and a half, the stock never failed. The stock never came back down. The stock was essentially consolidating in a tight range. So what was it doing, right? Just like we drew earlier, it was basically doing this, right? And then going back up, okay? And so if you're shorting, this was not the way to short. The way to short was to wait for this to fail. So once you had a break of this consolidation and you actually had a breakdown of the stock, this is where you wanted to short. And then you could, of course, put even your stop either at the same price or slightly above it. But now you can start to capture this downwards momentum. And so what happened was shorts essentially got stuck, and basically they let me go here. They basically got stuck, and then they got squeezed another time. And so a lot of people, again, from 22 all the way up to 25, were losing their accounts. And then you can majorly see this massive red candle, okay, where it basically overtook this candle, right? And it was showing the bearish sign. You can see the volume was large, and then you can see the RSI started to come down. So why, when you're shorting, you don't want to be that person that gets ran over, that's looking for the top, right? Because all you're doing is now covering, right? And then you short here again, and then you're covering. Why not come in here when you start to see the stock fail or retest, you know, maybe a high, and then it failed again? And that's exactly what it did here, right? So it overtook and engulfed this candle, and then it continued to fail, and then it consolidated, and then as the day sort of ended, all the short sellers had to cover their positions to wind down their positions for the day. So then what happened the next day was this. It was part two. And when, just so you guys know, is I recognize the 1950s as sort of a bottom to go for a long. So actually it was long this stock on Thursday around 1950. It did went just slightly lower, but you can see it consolidated and it went right back up, because there's always going to be some type of retracement, right? There are always going to be the sell-off, and then people get stuck, and then they essentially have to cover their positions and they buy it back. And so you're not going to just go straight down, and most stocks aren't going to just fail. And so we had this support line. So coming into Friday, guess what we did? We came right back to that support line, which was in the 19s, and we continued to squeeze up. But guess what? A lot of shorts did what? They would have thought that we're going to short on the previous day's high. So you can see here, right around, looks like about 7:45, which is about, let's just say 11 o'clock Eastern time, you can see this volume really picked up from the previous bars, right? This volume really picked up and picked up more. And then again, we had this squeeze. And what's a squeeze? Okay, the short squeeze again is when the stock is continuing to rise and it's starting to go essentially vertical or parabolic, and people and shorts are starting to cover, and it's starting to go up, 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 and up. So it's not your time to come in the stock and to go along and take that kind of risk, okay? This is essentially a squeeze. And then, of course, when you see this long, you see this sort of candle here, you see this long wick, that's the rejection and a double top here of that price, okay? So if you look here, guys, right, these wicks are super long, and you can see there's this sort of double top here, and now you're starting to see a failure, right? So they're pushing and it's failing, pushing and failing and failing. And then we have this sort of fast moving SMA line, and we can see now that we're starting to fail. But look what we did. We kept over the 19 area. So the volume completely died off as the day went. We reached the top and we essentially sold off. So shorting right? If you were shorting up here, you lost a ton of money. If you're going long, you made a ton of money. But the exact opposite happened in the afternoon. So if you're longing here around 12 o'clock Eastern time, you lost a bunch of money. If you were shorting, you made a bunch of money. So see how shorting and going long are essentially two different things. So if you shorted up here and you would have covered down here, you would have made essentially a $31 to $23 profit. So that's how you can profit off of going short, is taking advantage of these types of moves. So you don't have to just look for moves that go upwards. You also can look for moves going downward. But I encourage you guys, it's extremely a risky strategy if you're new to it. And that's why it's really important to have that sort of stop loss and that strategy and risk management. Because imagine if you're trying to find the top and this thing just keeps running you over. The last stock advantage or example, that I want to give is Tesla. Now, Tesla is a beast, right? We all know Tesla has been extremely a beast, and it actually, believe it or not, has gone up 800% from a year ago. Tesla short sellers lost, I think it was like 50 or like $30 billion in 2020. So short sellers, again, were people who bet that Tesla was going to go down. And if you look at Tesla, right, and it's gone over 800%, one of the things I asked this pro trader the other day is I was like, why are you shorting Tesla? You know, he didn't even respond, right? Because it was like, I get it. We can short intraday, and we've talked about plenty of examples of where you could short Tesla. For example, you can see here, right? On Friday, it had issues here in the 885, 884 range. It tried it, it failed, it tried again, and it failed. So here, from 884 all the way down to 845, you had a 40-point short move. You could have sold your shares here. Once you realize it was having issues at a certain level, right, where it constantly fails and fails, you can short on that level, and then you can start to see it unwind. Now, I asked is, why are you shorting Tesla? So this person's been building up a position, and you can see that Tesla has been trading on the upward band. It's been trading on the upper band of the Bollinger Band between the 20-day and the upper band for essentially since the S&P news. So why would you short a stock long-term, not swing, I'm talking about a swing short, when, for example, the last, I think it was like 10 or 15 days here, it's been opening up higher. It's been opening up higher. And why would you be the person that wants to find the top? So again, as being a short seller, why not look back and find where does it fail? Why try to short up here when you can say, okay, I got more confirmation, more confirmation. I've essentially tried this price level 3 times in a session. Yes, I feel comfortable shorting right here at that 885 level. Why be that person who's just constantly like, I'm going to short Tesla here, and I'm going to hold on to that position. I'm going to keep shorting it. Yes, it's going vertical, guys. Yes, it's way overextended. We know the RSI is way overbought. We know it's being way squeezed. I get that. I get long-term. Yes, we should expect a healthy pullback. Remember, pullbacks can be healthy for a stock. Stock can't just sustain just going straight up in the air, right? Which is what Tesla is doing. But my point is why be that person trying to find the top of Tesla when you can instead wait to see it start to fail and then start to get that position, you know? And there's plenty of opportunities to short intraday. So again, the Tesla short sellers have been on the losing, way of the trades, and they're going to continue to start losing until we can start to see some sideways action. And even on this channel, we've called that we expected sideways action around the 700 to 600 range. And again, we just went straight vertical on this upward band. Okay. And then for those who say, well, no, Tesla can't go down 20%, 30%, 10%. Guys, just remember this day right here. Okay. Post split. The offering was announced around 538, 550 is what we were trading pre-market, and we tanked all the way down to 310 on the post-market, which ended up being about 320 during the trading hours, which was a drop of around 40%. So I'm not saying Tesla's going to drop 40%. I'm long-term bullish on the stock. I absolutely love the company, but my point is that it's healthy for a stock to pull back. It's healthy for a stock to come back. And when it goes squeezes, this could be essentially shorts covering their positions. And as they're shorting, they're just getting squeezed up and they're losing more money. So why be that person that's trying to find the top of a stock? So with that said, guys, I know we covered a lot. If you made it through this video, I appreciate it. If you have any questions or comments on shorting or trading in general, feel free to leave it below. I do respond to all comments on this channel. And once again, if you did enjoy this video, please do hit the like and subscribe button. And I appreciate it, guys. I wish you guys the best of luck as always trading. Take care, and we'll talk to you later. Bye-bye.